All right. Good morning, trade pros. Sound check. 1, 2. Welcome to our morning market update for this beautiful Monday, August the 5th. Markets are getting annihilated this morning. There's big news out of China last night. Because I was in LA and stayed up a little bit later, I actually caught a piece of this, and it was very opportunistic. There was a lot of downside with a ton of volatility. And right before bed, it was like the saying, hey, the news actually broke while I was here watching Formula One. And let's talk about what happened, all right? So last night at 6:16 p.m. Eastern Time, the China offshore, it's not the Yuan, it's the Yuan, dropped and it was devalued to a record fresh low, all right? So China devalued their currency. For those of you that aren't aware of what this means, China, what it could do is set a daily peg on their currency. So they establish what the currency is going to trade for every single day, and that starts around 6 p.m. Eastern Time, which in China is right before the market open. And what takes place right there is that once they set the rate, it's allowed to float 2% above and 2% below that reference rate that China sets. So there's obviously a mechanism that's a free market mechanism, but it floats and rotates around supply and demand on the level that China decides what to set it as. Well, yesterday they set their daily peg at a record low at the 7 marker, so 7 yuan to 1 US dollar, and devalued their currency essentially. Opted and chose to make the currency weak below a point that they've previously said they wouldn't do. They said 7 is like a ceiling. We'll do whatever we need to do, step in, intervene into the market to hold that rate at least 7 or higher. Well, yesterday they abandoned that plan and absolutely cut the rate above that threshold, and a huge amount of selling happened, pushing the rate even lower as soon as they set the daily peg. All right, so why is this important? How does this matter? Well, the yuan, when it's actually devalued, allows exporters to sell for less. All right, that's the important part. So the one thing Donald Trump doesn't want is to have China sell more goods to widen the trade imbalance. And a cheaper yuan allows a wider trade imbalance to take place. It allows China to sell their goods for cheaper and allows the United States consumer to buy them for cheaper because the currency costs less. So it's a way to offset the impact of a tariff that's increased by 10%. All right, so Donald Trump signed increased tariffs on Friday of last week by 10% on $300 billion of goods that weren't before subject to tariffs. And China's response is, all right, well, we're going to weaken our currency to account for that so the consumer at the end of the day pays the same amount. So it's a good intention with horrific results. This market is ripe for a drop of 10+%. All right, that's what I'm going to tell you. So the one downside to this, you can say, well, that's good, right? The consumer wins. But the one downside of this is a cheaper yuan in China creates a really big danger and risk of capital outflows. So people who hold the Chinese yuan, who are local, who live there, are saying, well, the heck with this. If what I'm owning is getting devalued so sharply and quickly, why don't I sell my yuan and put my money outside of China? And this is called a capital outflow. And when that happens, that really hurts the Chinese economy. Chinese corporations are the highest leveraged businesses on the globe. All right, they have the most debt that they've taken on a corporate level. And when that money flows out, obviously that's a drain of liquidity, tightens financial conditions, makes it really tough for the economy to continue to perform at 6% GDP annually. So that's why everyone's freaking out, all right? That's why a cheaper yuan causes a lot of damage to the global economy. In 2015, all right, I remember this day very clearly. This when I was running an Iron Condor strategy that made almost 40% in less than 60 days. Actually, it was 90 days. Let's call it like 75-ish. So I remember it was 2.5 months. And as soon as that happened, the Iron Condor portfolio lost more than 80% of the gains it had made, right? So that's, at the time, I had a very automated system for that. And, I was able to salvage it, dump the portfolio. I was still profitable, and then even get on the short side for some more probability or profitability. And it was a big learning lesson, all right, that these events happened. In 2015, all right, of August 11th, China started devaluing their currency. By August 13th, they had devalued it significantly. And from August 13th, in the next 4 days, the S&P 500 crashed 12.6% in 4 days. All right, this thing is very significant. I started kicking back yesterday, relaxing, getting ready to go to bed. Then I heard this news, like, holy crap, this is massive. It's a big response by China, and it's one that I think is going to, in the short term, it's a response to the trade war, but I think it's an action that's ultimately going to hurt them as well, significantly. So we're going to be watching for the capital outflow aspect of this piece, see where the money's going from China and where it ends up. All right, in addition to that, this is why the markets have been so bearish overnight. In addition to that news, the other news item is that China also alerted their state importers or their state buyers to stop purchasing U.S. agricultural products. All right, and that's a direct response to what the trade war has been, how it's been developing and the escalations there. Because Donald Trump says, here's 10%, $300 billion worth of goods. China says, all right, we're not buying your agricultural products anymore. The tone of this response and the messages, I mean, to put it bluntly, from China's perspective, is screw this, we don't want to negotiate. All right, these nice negotiations and trade deals, we're going to talk, let's see what happens, it's over. It's done. That's a warning shot that's fired. From here, we get into a full-out currency war, and it doesn't get any better. It's going to be ugly, and unfortunately, that's what it's come to. So how do you respond to that? Do not buy this market in the open. If you're looking at this, say, hey, the market's cheaper today, don't do that. You're going to get kicked in the teeth. I've seen days where on news like this, markets have dropped 60, 70, 80 points with nothing more than a 8-point rally, and then down it goes. All right, so if you're looking to fade or buy the lows of today's market, this is the kind of day that blows out your account. Be very careful. All right, it's one of those things you say it can't go any lower, and then you get long and get stopped out, and it does go lower. It can't go any lower, you get long, you get stopped out, and it does go lower. And that happens multiple times over until you either can't take the pain no more or you don't have any margin left. All right, that's the mechanism of this market. It's what it's meant to do. All right, so that's the news overnight that's driving markets. It's significant news. It's causing a lot of turmoil in the global marketplace. VIX has spiked. Asian markets have gotten hammered too. So it's a response by China, and like I told you, it's not going to help them. And it looks like a move of desperation. They have to take action of some sorts. It's what they have. They have no goods to sanction because they don't import much from U.S. All right, so Japan's down 1.7%. Hong Kong's down 3 percentage points. Big drop overnight. China down 1.6%. India down 1.1%. There isn't a green market in sight at the moment. In Europe at midday, London's down 2%. Paris is down 2%. Frankfurt's down 1.6%. And in the United States, Dow down 1.2%. S&P down 1.3%. NASDAQ down 1.7%. Trading on overnight lows at this very moment. All right, so big sell-off. Crude oil's down 0.7% as well. Goiled. It's a Monday. I'm warming up into this. How do you guys like the tan, by the way? Pretty nice, huh? Gold is up 0.8% to 1469. We can see really push higher in gold. I was saying it's an overloaded trade, overcrowded in the institutional market. But news like this is going to do nothing but create money to go to it. So you have to understand when equities are being sold, they have to go somewhere. All right. So when you sell equities, you generate money. You generate demand for a dollar. And with this money, you have to do something because you're going to have to tell your investors where you put it. No investor in their right mind is going to pay an institution, a management fee if their management services constitute holding money in cash. Because I can do that too. That's easy to hold money in cash, put it in your bank account. So institutions are under pressure to reinvest this money. And now with the changing landscape, I think as we continue lower, more institutional traders that are long from below are going to have to dump. All right, they're going to have to take profit. To get out of this market, and that's where the liquidity comes from. Sell stops below, not just from day traders. Right? When you break 5, 8 points, 10 points out of an overnight range, you're stopping out day traders. The longer position traders aren't going to be close to their stops because they're below. All right, they're longer scale, wider view traders. So when you get swing traders, which are people who hold a couple days, when you get day traders, and when you get the institutional big money that have been long, starting to reposition and change their sentiment at the same time, you get the greatest volatility. Be very, very careful in today's market if you're planning to buy. I'm not telling you getting long for a fade won't exist as an opportunity today. I'm telling you it's a terrible idea for a long-term strategy. This thing could really get hammered. Yeah, gold's up to 1477. I'm looking at an overnight quote without the highs. I mean, if you really, I'd have to open up the gold chart. I haven't yet. I'm not surprised. I mean, it could hit the 1500 mark as this equity market sells off. I'm not going to pour into gold. It's way too late for me to get long. I don't care if it goes to 16 million per ounce. I'm just going to miss that move. I have my level below. I need to wait for a pullback. Even with this news, I think gold's a little overvalued on a momentum scale, and I'm not looking to participate at this high of a price. So I've kind of sat on the sidelines for this move, but there are other assets that we could look at. Somebody just asked about the PPT. What did you ask? Let me see. Will PPT jump in? Well, you know what's interesting about the plunge protection team, or the working markets group, as they're called more formally, is that the two key people in the PPT have left. I don't know if you guys know this. All right, because the New York Fed president that was just that was just basically nominated to run the New York Fed, and that's where the PPT operates. It's out of the New York Fed building. He didn't really agree with the philosophy of these guys. They've been there from the mid-90s. And so you have two new people running the PPT, the plunge protection team, which is designed to stabilize the S&P 500 market. This used to be fiction before. You say, is there a real PPT? Is there not? There is. It's an actual thing. There is a government branch that goes in and buys futures on the open market to provide support. Will the PPT step in? There's two new dudes that are absolutely fresh in trading and have an economics degree. So we put the PPT in the hands of two economists with very little real-time trading experience, whereas the two guys have been there since the mid-90s who have shaped and put their mark on the PPT are gone. All right? They resigned. They were fired. So we'll see. They might step in. They might not. I think that at some point they do. I don't think it's gone ugly enough yet. I think if the bids start to disappear, then we're in trouble. Then you're going to see the PPT pad the bids. How do you know if they're coming in? You look at the bid side of your ladder. You start to see the bids get thick. You know they're starting to come in. All right. You start to see some iceberg orders. You know the PPT is stepping in. The thing about the PPT though is this: they can only hold it off for so little time. Right? They can only stop the bleeding for a little bit, but it will continue. What the danger in this market is, and this is why I tell you not to buy. I saw this in 2015. Right? I saw it in 2012. I saw it in 2008. I've traded through these markets before. This is what happens, all right? You look at the ladder. On the right side, you see your offers where the sell orders are, and they're thick, a ton of sell orders. And on the left side, there's bids that are very low, and they just keep pulling. When there is no bid, there may not be a lot of volume that trades, but price will drop, all right? I've even seen slippage on the S&P 500 futures markets, which means it doesn't trade at a certain price level. It skips it. It's a gap of the auction because there are no buyers. Who are you going to sell to if there's no buyers? You're not. You're going to have to accept the lower price until you find buyers. And as the prices drop, buyers disappear even more. Now you have to accept the lower price. And that really pushes the beginning of liquidity evaporation and some ugly downside. Let me see a few more messages here on YouTube, and I got to go open up the trade room. Thanks, Jeff. I think we get a 10% pullback off the top here, and could it be the beginning of a bear market? I'm gonna say yes. I think the recession's coming in 12, 16 months from now. Is it gonna be this move lower that causes the bear market? Nobody knows. All right, I'd be lying to you if I said yes or no, because I don't know. And if I did get it right, I'd fluke it. What I will encourage you to do is look at the real-time price action. That has the answer for you. But I do think there is a very high likelihood of a recession now taking place in the next 12 months. You look at the yields and the yield curve structures, you look at what the Fed's been doing, the latest economic indicators, and you start to build a really high probability recession event coming up in the United States. And the ugly part is globally. This isn't good for China. This isn't good for anybody. All right, this is a situation in which everybody loses. So I think we're now into bearish mode, sell rallies, all right, especially rallies on low volume, and we're going to do that in the trading room today. So let's get started, guys. Enjoy your day. There aren't no big events at the moment. Bitcoin is up quite a bit. It's benefiting from the fact that there's fear in the market. People are selling their equities, buying into safe haven assets, and Bitcoin right now is behaving like a safe haven asset, which is very interesting. Bitcoin hasn't survived the recession yet, and this is the big test for it. We go through a recession, and Bitcoin starts to rally. It establishes itself as a safe haven player. Look out, this thing could really move. It's got legs. There's a lot of money coming into it. 10 a.m. we have ISM non-manufacturing index. 12:30 we got the TD American IMX. It's gonna get ugly out there. I don't know how to tell you more positively. Just track with the market. Don't get too excited or greedy or scared. Take this as an opportunity. If this is your first time trading, these are the kind of markets that tend to mess up people. Join us in the trading room. We'll guide you through it. We trade every morning. We day trade with some pretty high success. Hey, look, there's a plane coming in. It's kind of cool. I guess the airport's open. It's really early here in LA. You guys take care. Have a great day. Let's open up the trading room. Team in the trading room, I'm going to set some levels for you. A ton of opportunity today. I'm seeing some liquidity build to the downside. Give you some targets and some great short areas. Let's jump into it, and then Steven will cover oil. Take care, guys, on YouTube. Have a great day. Manage your risk. Trade like a TRADEPRO. Goodbye. You have to go to the website, Onome. Go to TradeProAcademy.com, and the trading room is included in the Pro and Elite memberships, and you can join it in real time as soon as you sign up. All right, you don't have to wait. So we'll see you there. Take care, guys. Have a great day, and I hope you take advantage of this opportunity. This is what day traders live for. Goodbye.